Good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Wednesday, May 4th, 2022. And our top story today, the impact of inflation on real estate. And joining me now to discuss this and a lot more, Deidre Woolard is with The Motley Fool. Deidre, great to see you. Thanks so much for joining us on the program this morning.
Great to see you. Glad to be here.
Yeah, it's great to talk to you. And look, I don't have to, this is not going to come to a surprise to you or anyone in our audience. Inflation really taking a toll on the American public in terms of gas prices, food prices, prices of goods, comparatively with wages. So this is a real troubling time for many, many Americans. What I want to do is talk about real estate and why it is and is not a good hedge for inflation. So why don't you give us your perspective on why real estate is a good hedge for inflation and why people buy it?
I think the term hedge is tricky. There really is there's no perfect hedge for inflation, but why do people like real estate? It tends to retain its value depending on the sector that you've got real estate in. You've got some pricing power depending on lease terms, and we can talk a little bit about that as we go on. But in general, it tends to be a place to feel a little more safe when the market is a little volatile, which it certainly has been lately.
So let's talk first about residential real estate, and I'll accept your correction around hedging. Probably not a good word. That's my word. It's not yours, not attributed to you. But let's talk about residential real estate. You and I have been talking for many, many, many months and arguably for many years about housing prices and inflation. This really can benefit someone who is, the cost of prices. This can benefit someone who owns a home or owns property that then goes ahead and rents it out.
Yeah, absolutely. We're seeing rents hit really, really high levels lately, which, we've got sort of the two eyes that we keep talking about: inflation, but also interest rates. So it's a tough time to be a first-time home buyer right now because you've got interest rates up above 5%, which they haven't been for a long time. Housing prices have not moderated yet, so you've got a crunch there. And with inflation, the average amount of money that people are spending on regular household expenses keeps going up. So that in turn is leading to a real opportunity for the rental residential market.
And let's talk a little bit about, now let's shift gears, talk a little bit about commercial real estate. And I have to think, and I want to get your opinion on this, that it's kind of a mixed bag, right? We're going to talk about apartments and REITs in the second segment, but let's just talk about commercial in general and where it might be a good investment, at least in the short run, against inflation.
Well, it all comes down to length of lease and pricing power. So when you look across the different types of real estate sectors, you see a wide variety of kind of lease length. I mean, you can start with something like hospitality, where essentially it's a one night or 2 night lease, so you can reset your prices pretty easily. Residential, multifamily, you're probably looking at year-long rents. Office tends to be longer. Same with industrial. So there's not as much pricing flexibility within some sectors of real estate.
And in terms of offices, not everyone is going back to the office full-time, at least not initially. We've seen reports from Motley and other periodicals that people have kind of changed their post-COVID, post-pandemic strategy. Maybe they're going to a more hybrid model. This could mean, Deidre, that people reduce their footprint slightly, I would think, in terms of office space.
Yeah, it's been fascinating for me. I've been studying it for the last couple of years. I am no closer to understanding what's going to happen next. I still believe we're going to see a longer term return to work. But for the short term, maybe those 3 to 5 year leases, companies are definitely reducing their footprint. I believe it was Airbnb last week that said that's allowing people to work remotely indefinitely. And yet at the same time, we've seen companies start to buy or lease more office real estate we're definitely going to see more people returning to the office. Like you said, it's probably going to be a hybrid situation, a lot of hot desking, so you may not need as much space.
Yeah, I like that you bring up Airbnb. I would think that they'd want people to stay in Airbnbs, not be back in the office. But hey, that's just a really bad joke on a Wednesday morning. Let's talk about retail malls, indoor-outdoor malls. Some of these businesses, Deidre, really suffered. I'm not talking about the mega brands, the J.C. Penney's, well, maybe that's a bad example, but like the Walt Disney stores and things like that probably didn't suffer as much. But some of these malls may need to release to newer businesses or existing businesses.
Really tricky to figure out what's going to happen with malls, because we saw this retail resurgence after the pandemic abated a bit. We saw this thing called revenge spending, where people really wanted to go out and buy stuff. We're seeing that energy kind of shift to travel, and people really wanting to spend a lot of money on travel. But at the same time, inflation is going to start curbing some of that. And so what we probably should focus on is those grocery anchored malls, those essential businesses, those kept right on going through the pandemic. If we see a long-term inflationary environment, nobody's going to stop buying groceries. They may stop some other discretionary spending. So those grocery anchored malls should still do okay.
Yeah, you got to eat, got to drink. I mean, that is a necessity, regardless of how much money you do or do not have to do that to sustain yourself. Last question for this segment. Let's talk about data centers. During the pandemic, data centers were I don't put words in your mouth, you'll correct me, were a good investment because people needed more cloud space. A lot of the tech companies like the Zooms of the world were doing real well, the streaming services. Tech companies have been hit kind of hard during this market volatility. Data centers still needed? We're still going to need server farms, Deidre?
Yeah, absolutely. Data center stocks are kind of getting lumped in with some of that tech downturn. And so there are some great buying opportunities right now. Bottom line is the need for data isn't going anywhere. We'll get a little bit better at reducing the footprint of data as technology continues to innovate, but data centers aren't going anywhere, and still a really good investment for the long term. A couple of them reported earnings in the last couple of weeks and talked a lot about the opportunities, not just in the US, but all around the world, especially in areas that are really sort of just starting to develop their technology needs, like parts of Africa and Asia.
Well, Deidre, when we come back, we're going to talk about apartments and apartment REITs, why they could be a really good buy. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're talking this morning to Deidre Willard of The Motley Fool. Deidre, thanks so much for staying with us this morning.
Thank you. Glad to be here.
Yeah, real interesting conversation about real estate and inflation and taking a look at some of the sectors. One of the sectors, Deidre, that I teased was rentals. And this is one that we're going to focus on this segment. Look, housing prices through the roof. We just talked about it in the last segment. That's driving rents up significantly, not only in major metropolitan areas like New York, Los Angeles, etc., San Francisco, but also throughout the country.
Yeah, absolutely. And during the pandemic, we saw rents drop really dramatically in San Francisco and New York and some of the other major metros. Those have come back very quickly. New York Times had an article recently about people who leased an apartment during that nice little window and then unfortunately have to move because the rents went back up. So definitely things are back to normal and above what they were before the pandemic.
Yeah, I wonder if we're going to hear again from the rents too damn high party. I think they ran in the election, I guess when Mayor Bloomberg was elected. Anyway, as I completely digress, long term. Now, let me back up. These increases, is this to a normal level? Returning to a normal level in terms of these rents in major metropolitan areas, or is this above that in an effort to recoup what people may have lost during the pandemic, meaning landlords?
Yeah, I don't think it's an effort to recoup. It's more just the fact that this is what the market is demanding. So when you've got demand really high, you can charge really high rents, and that's what's happening right now. And it's not just in those major metros, it's really happening all over the country. We're starting to see a little bit of kind of settling out from the pandemic. We had a lot of people moving around, trying different things. Now people are sort of over that phase. And I think that move back to cities is part of what is driving this.
When you look at apartments and apartment buildings, if I'm an investor or someone watching this show, and we talked about the benefits of real estate in an inflationary environment, first, how do I get access to buying an apartment? Do I just have to go out and buy and build a building myself, or are there different types of investment vehicles I can invest in?
There are so many different types of investment vehicles, depending on how much money you want to spend and how much you want to make real estate part of your portfolio. Easiest thing to do, of course, would be to buy a share in a publicly traded apartment REIT. There are a variety of those. One of them is Mid-America Apartment Communities, which is ticker MAA. They have a variety of communities all across the country and especially in the Sun Belt. You've also got real estate crowdfunding, where there's investment in those types of buildings. A little higher up the food chain for accredited investors, you can invest in a single building or become part of a syndicate where you put in maybe $25,000, $50,000, pool your money with other investors and buy a building. Higher up from that would be, of course, buying a building on your own,
which would take significant capital. You'd
Absolutely.
have to probably borrow if you didn't have the money. And it's not like not like I'm Elon Musk or anything where you can just pick up and spend billions of dollars. Deidre, what's great about buying an apartment building or apartment REIT or something like that? Is it that it's predictable income and the leases are a little bit, longer term relative to buying a hotel, for example, a hotel REIT?
Yeah, I would say that multifamily tends to be a steady investment, partly because demographic trends are that we've got more and more people needing places to live. One of the things that one of the areas we're undersupplied in is workforce housing. So that just means average people looking for a place to live that isn't going to be too expensive. There's an undersupply of that. There's a little bit of an oversupply to some extent in luxury residential in some markets, but really it's just a solid investment. People always need a place to live, and where that is, it tends to shift a little bit, which is why apartment REITs are kind of, you want to look and find one that's really distributed well across the country.
And then last question, how do I buy a REIT, and what are the types of things, what are the types of fees that I may be assessed? Is it similar to buying a mutual fund where I would go out to a brokerage or go into my retirement plan, for example, and buy a share of the REIT?
Yeah, it's just the ones that are, there are private REITs and there are publicly traded REITs. Easiest ones are absolutely the publicly traded REITs. They trade just like stocks, so you can get in and get out very, very easily just through a brokerage account. Recommend though that you buy and hold with these, because you want to, this is really the type of thing where you want to hold on for the long term. Great thing about REITs also is that they pay a dividend, and so you get that income. That's why they are awesome to hold in a retirement account, because you don't have to, you could just sort of let those dividends continue to accrue in a nice tax-free retirement account.
Well, there you go. Deidre Willard, always a pleasure chatting with you. Great conversation about inflation and real estate, and of course, REITs. Looking forward to having you back on the program again very soon.
Thank you so much.
That wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the latest curated news in lifestyle, wellness, finance, tech, so much more in all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content? Well, visit our website and our streaming partners like Amazon, Roku, Samsung, over 100 to choose from. We're back again tomorrow for another edition of BRN AM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.
Are you being audited? And do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.